Yeah, you can. I can see your presentation, Mayor. This is for relative valuation. Okay.
Yes, sir.
तो आज एक्चुअली क्या है कि आज अगर हम सपोज ये तीनों प्रेजेंटेशन कर लेते हैं, जो मेयर इज गोइंग टू प्रेजेंट ऑल द थ्री, ओके, इक्विटी, डेट एज वेल एज रिलेटिव, ओके,
Yes,
फाइन.
sir.
So in the last class, I'll that we will just end up the lecture after this presentation. Is it okay?
Yes, sir. No problem.
And उसके बाद फिर हम लास्ट क्लास में I'll cover up the some balance part. क्योंकि more or less I have covered, and your take home paper, I mean, are you working on that?
Yeah, I haven't started working yet, sir,
अच्छा,
but I'll start.
आपका तो ये खत्म हो जाएगा once this all these three presentations are out of the way, then you
Yeah.
can start and thinking about that. And Akriti, what about you?
Yes, sir, we have.
रितेश, आप कर रहे
Sorry,
हो?
sir.
हाँ, तो
Can
ठीक
you
है.
Yes,
repeat,
sir,
sir?
I have started.
अच्छा, no, regarding the IPO, take home paper.
Sir, I have
Yes.
started, sir.
Okay, so what I'm doing is I'm giving this take home paper to Monica. She will just officially, declare this as a take home paper. Of course, you have already got it, so you're preparing it. So I'll just ask her to just share it with all the students so that they can, submit their paper on, say, 6th or 7th or whatever date we decide. Okay, right?
Okay, sir.
6 रखा है. आप जो भी आप कौन सी डेट चाहते हैं, आकृति?
Sir, we can do it till 6 only.
Okay,
Like,
ठीक
I
है.
am okay with it.
Sir.
हाँ, तो लेकिन मेयर ने अभी शुरू नहीं करा, so we will I'll extend it by 2 days. Okay, fine, you can
Okay,
submit that.
8.
By 8th you can do it. Okay, चलो
All right.
मेयर, you can start.
Okay, sir. So, sir, for relative valuation, the industry I chose was FMCG industry, and the major companies which in FMCG industry, as you can see, there are HUL, ITC, Nestle India, Britannia, and Dabur. They cover almost around 81% of the market share.
Okay,
And
81%. So which you have chosen? FMCG companies. Okay.
yes, sir.
Okay, fine. So that covers, these all these what, five? One, two, three, four, five.
5 companies, sir.
So
Yes.
they cover about 81% of the this thing market.
Yes, sir.
Fine.
And all these 5 companies are listed, and other major FMCG companies in India are Patanjali and Reliance Consumer. These are Patanjali is not listed, and Reliance Consumer comes under Reliance Industries. So it's the separate Reliance Consumers is not listed, but as a company it's listed.
Okay.
So next. So if you see the growth, the FMCG market globally, it is around 3,100 billion, and it's expected to grow at 7.6 CAGR until 2030 to 4,800 billion. And if you see in India, it's around 110 billion, and it's expected to grow to 220 billion. It's India is growing at a higher speed than the global average, if you can see that.
Yeah. That's okay, because India is definitely
Yes.
will have a higher growth compared to all other things.
I have written a small note about global FMCG outlook, how healthcare and wellness focused, sustainability, and private label, these are the key drivers in the industry. And in India, rural demand is increasing, urban premiumization, digital and modern trade expense, Ayurveda and local brands are like Patanjali, and also the major companies which I have listed, they are also coming up with Ayurvedic products. Uh, so there are few challenges like inflation, rising input cost, competition for unorganized players. So FMCG industries has a very high potential to grow, and this market is like companies investing in rural distribution, premiumizing the products and sustainability. And if you see the cost aspect, mainly for FMCG product, the main cost are this palm oil, wheat, sugar, milk, packaging material, and agro-based product. Even for companies like ITC, major input is like tobacco products.
So palm oil is how much?
So based on how the cost index, not directly the cost,
Okay.
how
No,
the cost
I
is.
mean, recently, many of the, as a health, this thing, many of the products, they're saying no palm oil. Have you noticed that?
Yes, sir. They do advertise with no palm oil, but major products like even ice creams, They are not real ice cream. They are made out of palm oil.
Because palm oil, excessive consumption of palm oil is not considered to be very good for health.
Yes,
So,
sir. Yes.
of course, a limited amount will not make any difference, but now everybody is using palm oil. So, whenever I buy, things today, I always, say no, no palm oil, bread or something, whatever. I just search for that
Yes.
and,
You see, all the biscuits, even Maggie,
everything with
major
palm oil.
FMCG products, they contain palm oil.
अभी कई सारे प्रोडक्ट जो आ रहे हैं ना उस पे लिखा हुआ है नो palm oil,
Yes, sir. Yes, sir.
So ठीक है, I think most of you know that. Akriti, you are knowing that, Ritesh?
Yes, sir.
ये पता है आपको बात palm oil वाली जो है?
क्या सर?
This palm oil.
यस सर, अभी काफी कम हो गया आई थिंक।
हाँ।
बहुत सारे
नहीं
आइसक्रीम
कम तो
कंपनीज।
नहीं है. I mean everybody puts a palm oil because it is the
हाँ बट
cheapest this thing. But now whenever you are buying, just look for the product whether it is containing palm oil or not, or look for products which are having no palm oil. So it will
So
be worth.
every company is coming up with a new product with
यस
no
सर।
palm oil variant, so they can
Slightly
cater
costlier,
to.
but it is this thing like all Haldiram products, all what we eat, it contains palm oil.
Yes, sir.
ठीक है, चलो, go ahead.
So also I have tried to put the cost breakdown of the companies. Material is major input for major cost center for all the companies. If you can see, it's almost around 62 to 65%, 47 to 65%. Also, packaging, advertising, logistics, employee costs, and other operating costs are smaller part. Major cost center is raw material for all these companies.
So advertisement is one of the big costs for all this industry, isn't it?
Yes, sir. Yes, sir.
I mean, they're all in per single. I mean, almost to the double-digit figure.
Yes, sir.
Okay.
So raw material typically account for 45 to 65% total cost. If you see, Britannia is almost around 65%, Nestle 60%, HUL 52%. So FMCG firm 40% market. So with increase in raw material cost, it directly affects the companies. They either do they decrease the package size or they increase the mainly they decrease the portion size. तो मैगी का आप पहले देख सकते थे सेम अमाउंट में कितना बड़ा पैकेज आता था, अब क्वांटिटी कम आती है, सो
Yeah, because everybody is I mean trying to lower the price or rather
यस
keep the price same, but reducing the
reduce the
content.
quantity.
Yeah, quantity.
So if you to mitigate the impact, the price hike, grammage reduction, alternate sourcing, and regional procurement, these are the few strategies they use to decrease their cost. Despite these price sensitive segment, especially rural market, limited extent to pass through affect the volume. For example, HUL rural volume growth dropped 1 to 2% during financial year 22 compared to 5 to 6%, 5 to 6% per inflation. So majorly these are the in 20 price have gradually softened. So during COVID, after COVID, the prices of these material have decreased a little bit.
Mm.
So this is helping these. So they had already reduced their product size during when the price hike, and they are continuing it now. So they are making more profit on the same products.
Mm. Yeah.
So mitigating strategies, what they use for these things is uh, strategic sourcing, sourcing from different places, and localized sourcing. These are the some and grammage reduction. These are the few strategies the different companies use.
So nowadays, the AI gives you a lot of information which you were earlier not able to
Yes,
get it. It's
yes,
good
sir,
because
yes,
it's good, because we are using that. I mean, resource. So it is helping us to understand things much better.
yes,
Of
sir.
course, people always say that we are always looking at the AI, but it is always good to research yourself and find out. Of course, but the AI sometimes gives wrong information, but you need
Yes,
to
sir,
filter
definitely.
out that.
Yes, sir.
Okay.
So if you see
Abhi,
over,
just to give you an thing, there was a end-term exam in one of the university. There were about 120 students whom I were teaching. Okay, so out of 120 students, during the end-term exam, they used Chat GPT to find out the solutions, and some of them, they you can always, look at the answer and you know that it's coming from the chat GPT because it will carry certain marks or certain, trail where you can always identify it's come from a chat GPT. So, so that is what people are doing now because, either they are carrying their mobile or something. So they, look for the solutions from chat GPT. I mean, of course, it is not good for, I mean, while, you're giving an exam, unless, I mean, you're allowed to use that in the exam.
Yes.
Okay, chalo, carry on. So this is your, data with regards to,
Yes.
okay.
So majorly five companies which I have chosen. If you can see their band and market capitalization and enterprise value as well. And if you compare sales, ITC has the highest sales.
Hmm.
Uh, EBITDA also, if you can see ITC, EBIT, majorly
So
ITC is
in terms of market cap, which is the biggest company?
income market cap. HUL is the biggest company,
Oh yeah.
but in terms of sales and profits, if you can see, ITC is doing better, sir.
Okay, so Hindustan Liver EBITDA is 29,000 ITC and Hindustan Unilever is about 16,000. In terms
Yes,
of earning also, ITC is double than the Hindustan Unilever.
yes, sir. Yes, sir.
Okay, but if you look at, the price earning ratio of
Yes,
Hindustan
sir.
Unilever versus
Yes,
ITC,
ITC.
so
Yeah.
how ITC is trading lower, in terms of P multiple? What can be possible reason according to you?
I think the industry they are in mainly in tobacco industry. Their major products is tobacco,
Yeah.
and their fear of government regulations. Last budget, there was
Absolutely.
fear of
So that's the reason. It's a highly regulated company.
yes,
About, most of its, I mean, cigarette, I don't know what percentage of revenue comes from cigarette, but it should be quite a decent one.
yes,
So that is, causing basically the lower P ratio because it's a regulated, industry.
yes,
So it's not a pure FMCG play in terms that it is, it doesn't have a clear, this thing like other companies like, product what they are manufacturing or selling.
yes, sir. But if you see Nestle is also compared to others, it's higher in price to sales EV, and even in P ratio, Nestle is highest in all
Okay.
these
So
companies.
tell me in terms of growth, just show the growth part. P के साथ the growth आ रही है. So in terms of growth, which companies, growth आपने कैसे दिखाई है? 944.
वो
So you need,
फॉर्मेट चेंज
हाँ
हो गया
तो
होगा
ये
सर
इसको
फर्स्ट
चेंज
टाइम।
हाँ वो उसको चेंज कर दो. अभी कर
यस
सकते हो नहीं?
यस सर आई कैन डू इट। वो टोटल का परसेंटेज हो गया सर।
अच्छा. If you can't, you can do it later on. Submit. There's no
यस
issue.
आई डू इट लेटर एंड समरी
Just
सर।
show me the growth in terms of the growth number of, this thing. Just show the last this thing bottom boxes. Show for Hindustan Unilever. What's the growth? 9.44.
9.44 yes।
And in ITC, it's about 10.86. Nestle is 10.93. And Britannia, it's about 13.7. And Dabur, it is 13 point. And you got the growth from the same this thing source from where others have got.
यस सर दिस thing
Okay. Trading
trading
view,
view
trading view, trading view. Okay.
trading yes
So the companies, its growth is. I've seen that all these companies, they have been growing at around between 9 to about 13%, isn't 13 or 14%?
yes
Okay. So Hindustan Unilever is growing at the lowest, isn't it? 9 point
yes sir
something. Okay, so because Hindustan Unilever somewhere, the price, this thing is not going up so much in the last 3 to 4 years. That means the
yes
return what it is giving is not so great. What is the
it's
ROE of
very,
Hindustan Unilever? It
like
has
a
been,
very big company. It has reached this
it's,
uh,
yeah, somewhere, it has plateaued now.
yes sir it's becoming stagnant
Yeah. So other companies are, growing at a much better and doing much better in terms of, if you see the
yes
P ratio of, let's see the P ratio of all the companies. The P ratio of is 51, 25, 67. So of course, it has the lowest P ratio. Just leave out ITC.
yes
The
sir
P ratio of Hindustan Lever seems to be the lowest among all, isn't it?
yes yes sir
ठीक है. Okay, so and in terms of beta, they are all less than 1, and all
Yes,
are
sir.
around the range of about 0. 0.6, 0. 0.7. So they're less risky because of FMCG.
Yes, sir. So
So,
even with the change in economic condition, the products are most of the products are necessary products are
mhm.
which people buy even if they are not doing very well financially, or
Yeah.
it doesn't depend on their income level or extra income.
So then recommendations, what are you saying?
Yes, sir. I followed the trading view recommendations.
Mm.
Buy neutral for Nestle because of I don't remember this. There was some reason I had studied when I was doing the assignment.
Which one?
Nestle, it's because its P is very high compared to the industry average.
But then again, it's if you look at the growth of the Nestle, the
Yes, sir,
growth of
10%.
Nestle is the highest among uh, among this 10.93. No, Britannia and Dabur have higher growth
Yes, sir.
prospects going forward. Okay.
Yes, sir.
So I mean Nestle, you're saying neutral, isn't it?
Yes, sir.
So why high valuation?
Yes,
Okay.
sir. Main product is high P ratio compared to industry average. It's high. It has the highest,
Okay.
and yeah.
Whereas Hindustan Lever is a buy. Okay. Fine. And ITC is also a buy with low P. Okay. And what is the growth of ITC? It was also
ITC growth is around 10.86.
10.86. Okay.
The major reason for neutral was the P ratio aspect.
Maybe because it's highly valued at the moment among the
Yes,
pack.
yes.
So, ठीक है. So anything you want to say? Anything further in this?
Just that rest of the details of each company I have added
Okay.
based on their what type
ठीक है.
of
So
product
you just share
category.
me the file. I'll just go through. So
Yes,
now
sir.
tell me what was the learning, when you did this exercise? I mean,
So
what was the new learning?
main thing was overall industry, how major thing was how cost impact the FMCG industry,
Hmm.
and also
Now tell me about this whole, the template and the growth, the numbers which you got, and then comparing all the relative valuation metrics. So was it something you learned? I mean, something new in this?
yes, sir, definitely the whole format was something new, and we did relative valuation previously, and if this we had this format, it would have been very simpler for us to do.
Oh. Now,
Uh,
there is something which maybe I'll cover in the last class. I don't know whether I should. There is something called predicted PE. Okay.
yes,
Which means that you can, find out what should be the P ratio of a company. What
yes,
should
sir.
be the predicted P based on its, all the parameters, its revenue, its growth, its beta. So it's through regression technique. Okay. Through regression technique, you can calculate what should be the ideal P ratio of the company. Okay.
No,
Then you compare that ideal P ratio with the actual P ratio. And then you
yeah,
can make a view whether the company is overvalued or undervalued.
no, okay, sir.
Okay, so that is through statistical, regression technique. But for that, we must have at least, quite a lot of companies in the same industry, because the data size, sample size should be big enough to really,
Yes,
make that statistical tool working. So that's why,
yes,
we may use that, but it will not give you a very proper, kind of a uh, inference, because of the fact that we are using a very small data set as compared to, when we go to like in countries like US and all, there we find at least 30 companies, in the same kind of a industry. So we can always use that, statistical tool through the regression technique and work out the P ratio. What should be the ideal P ratio for that company?
yes, sir.
Akriti, are you there?
Yes, sir. I'm here.
So what I'll just share you a video where there you can just calculate what should be the ideal P ratio for that particular company. This we did for in the case of an IPO. Last time, of course, it was done by some of the BMS students where they calculated what should be the predicted P ratio of that company which is coming with an IPO. Okay, and then compared it at what price they were offering. On that basis, they were trying inference whether you should invest in an IP or not. बट वो उतना ज़्यादा सक्सेसफुल नहीं है इंडिया में बिकॉज ऑफ द फैक्ट दैट देयर आर वेरी फ्यू कंपनीज ऑन विच यू विल आई मीन यूज द रिग्रेशन एनालिसिस. Okay, but I'll still share that it will be good for your future this thing. Okay,
All right.
Okay, sir.
you may or may not use in your this I mean assignment, you may not, but it will help you out to understand, to calculate the P ratio. What should the company should command in the market? What is the ideal P ratio at which the company should be trading at? Okay, and at what it is trading, it's a real this thing P ratios. Then you compare that and find out whether the company is overvalued or undervalued. Okay, go ahead, Dave.
Yes, sir. So rest of the things are the about each company, how they are performing, each their revenue segmentation based on their product category, and India and international, how much revenue they are earning,
Okay.
and rest of the details I have.
Okay, so this is the price target. This is which company? ITC.
This was
Hindustan Lever.
this one Hindustan Unilever. Yes.
Okay, so you have all the backings on the basis of which you have made your this
Yes,
thing.
sir.
Okay, fine. Okay, fine. It's okay with me. So we can move on to the second presentation if you want.
Yes.
Okay, unless you have to say something more.
No, sir. I can move on to the second one.
Fine. It's okay. It's a good, I mean, work what you have done.
Yes. Thank you, sir.
The presentation was quite smooth and you covered, everything. Okay.
Can you see my presentation, sir, or is it showing the valuation?
It is showing valuation at the moment. I can't see the other one. So
Yes.
which one you are now going to present? Equity?
Yes, sir. Equity. I'll just stop sharing and reshare again.
Okay. Just stop resharing and then. Okay, so now I can see, yeah.
Yes, sir. Can I start?
Yeah, you can.
Yes. So this is my analysis on equity mutual funds, and so main objective of this assignment was to analyze and compare performance of. I have chosen mid cap, small cap, and multi cap equity mutual funds in India using key financial metrics, assess their risk return profiles, and recommend suitable portfolio for low and moderate risk investors seeking stable yet competitive returns.
So Abdul,
So,
you can join, eh?
Yes, sir.
Okay. ठीक है, चलो,
the
go ahead, please. Yeah.
main methodology I have used is fund selection. Selected five funds from multi-cap, mid-cap, and small-cap mutual funds based on strong Sharpe ratio, risk return metrics, asset under management, and their main thing was CRISIL rating and past performances. Data source mainly I have used money control, and key metrics analyzed were the return, CAGR return over the years, asset under management, standard deviation, and other ratios. And benchmark compared benchmark was Nifty 50.
Okay.
So overview of mutual equity mutual fund. Equity mutual funds are investment scheme that primarily invest in stock or equity related instruments. These funds aim for capital appreciation over medium and long term, and suitable for investors with varying high risk appetites. Depending on the type of equity fund, they are regulated by SEBI and are widely used by retail investors in India to gain exposure to stock market through professionally managed portfolios. So there are major equity mutual funds in India: large cap, mid cap, small cap, multi cap, flexi cap, ELSS funds, sectoral funds, value funds, and focus funds, and dividend yielding funds.
Okay.
So out of these, I have chosen mid cap, small cap, and multi cap. Small overview of each of these funds. So mid-cap, these funds invest in medium-sized companies, typically ranked from 101 to 250 by market capitalization. They offer balance between growth potential and risk, making them suitable for moderately aggressive investors. And next is small-cap funds, focused on companies beyond 250 in market capitalization. Small cap funds offer high growth opportunities but also carry higher volatility and risk. Just a minute, sir. There's someone at the door.
Okay.
Just sorry for that.
तो आप कैंपस में हो?
Yes, sir. We are at the campus only.
Okay, okay. And in your respective hostels, in it, isn't it?
Yes, sir. Yes, sir.
Okay, not sitting in 30, what was that? 9?
No, sir.
No, sir. We are in our
Okay,
rooms.
okay. ठीक है, it's becoming so hot now that, for me to travel about 2 hours, and I mean, both ways, I mean, 2 hours going and 2 hours coming, so it's saving me a lot. But
Yes,
actually,
sir.
we are, again, we are not losing out because so far, how has been the experience, online experience, Meher, Akriti,
It's
Ritesh?
been good, sir. It's like normal. There is
Normal.
no
So we are
much.
not,
Yes, sir.
are we missing out the offline kind of a scenario where we think that, teaching is much better offline? Is it?
No, sir. I think online also it was very interactive sessions.
Unless it becomes attractive and the students are less. If the students are, I was teaching about 60 students of BMS, just we finished, and it was difficult to interact with, each one of them. And most of them would be, just, listening and not, interacting while the lecture is on. And you can't, interact with each one of them. Only, just a few, I mean, maybe 7, 8, 9 at the maximum out of the 60, the class of 60. So maybe, when we're having a large class, then a physical class makes sense. Okay. ठीक है, चलो. May continue.
Yes, sir. Small cap funds. I'll repeat it again. Focus on companies beyond the top 250 in market capitalization. Small cap funds offer high growth opportunities but also carry higher volatility and risk. They are ideal for investors with high risk appetite seeking long term capital appreciation. And let's come to multi cap funds. These funds invest across large, mid, and small cap stocks, providing diversification and flexibility. They aim to optimize return by adjusting allocations based on market conditions, making them suitable for moderate risk tolerant investors.
So you have chosen mid caps, small caps, and multi caps, is it? Or you're explaining all overview?
No, sir, I have chosen these three.
Acha, 3006. Okay,
Yes.
Akriti, the last class which is going to be there on 6th, we can have online, okay? Because there is no point now because we have covered almost everything.
No.
तो ठीक है, उसको भी आप एक ऑनलाइन में डाल देंगे, उसको मैं बोल देंगे maybe.
So Monica ma'am, she was asking from me today that whether we'll have our last class online or offline.
तो क्या बोला फिर आपने?
मैंने अभी तो बोला था कि it might be possible, it's not confirmed yet, but it's possible that we'll have offline class.
हाँ
तो
ठीक
उन्होंने
है.
बोला कि पहले बता देना because we have to do arrangements for cab.
हाँ नहीं ठीक है, तो अभी उसको ऑनलाइन में बोल देना, आप मैडम को ना एक बार डाल देना कि सर से बात हुई थी, because last class we have done each and everything, there are only presentations left now, so we will be having an online. Just send this message to her on the WhatsApp.
Okay, sir.
Maybe today or tomorrow, whatever, but send her, okay, so that she
Okay,
doesn't
sir.
book a cab for me. Okay.
Okay, sir.
ठीक है, क्योंकि उसका कैब ही उसका मेन वो है. Otherwise, I don't think that there is any kind of this thing that they want that it should have an offline class.
Yes, sir.
वो कैब बुकिंग वाला एक पार्ट है उसके दिमाग में कि कैब बुक करनी पड़ती है उसको.
हाँ, yes, sir.
ठीक है, चलो, ओके ओके. So,
Okay, sir.
very sorry
Yes.
for that. I mean,
No problem. No
okay.
problem. So key performance metrics are the CAGR growth over years and asset under management. So higher asset under management normally indicates a stable fund or a better fund. Standard deviation, this reflects the volatility or risk associated with the fund. Beta shows the fund sensitivity over the overall market on the overall market movement. Sharp ratio evaluate the risk adjusted return using standard deviation. Trend ratio assesses risk adjusted return based on market risks, that is beta.
So tell me, Meher, I mean, which ratio is better, sharp ratio or trainer ratio?
I believe sharp ratio, sir. It gives us the
Acha,
overall.
now because I used to struggle with this answer, and it is
Yes.
sometimes very difficult to explain, which the ratio is. Even as a professor, whether the sharp
Yes.
ratio is better or the trainer ratio, I had a standard answer because when you're talking about a mutual fund, of course, we always assume that it is a fully diversified, kind of
Yes.
this thing. So in that case, trainer ratio will be better, isn't it?
Okay, sir.
So you pose this question to Chat GPT, okay? And
Yes.
all of you, okay, just post these questions. Akriti, Mahir, RK, Abdul. So do that and just share the answers with me, okay? Fine.
Sure, sir. Sure.
Maybe in a day or two, okay? Fine.
Yes, sir.
Okay, sir.
And expense ratio and NAV growth. So if you see mid cap funds, I have chosen 5 funds mainly based on their CRISIL rating, asset under management, and the return they have produced over the years have not gone under 3 for the CRISIL rating. HDFC Midcap, Total Emerging Equity Fund, Edelweiss Midcap Fund, Miraya Asset Management, and Nippon India Growth Funds. And two of the funds currently, which I also invest in,
हम्म, कौन से वाले में?
HDFC Midcap and Miraya Asset Midcap Funds.
Okay. I have also invested. I have invested in SDSA mid cap. I mean, quite a large portfolio is coming in mid cap,
Okay.
and then I have also invested in Mirai asset mid cap.
Yes, sir. Yes, sir.
Okay, fine.
Yes, if you see expense ratio, except for Kotak Emerging Fund, Edelweiss has the lowest of only 40, around 40%, and HDFC has around 90%. And if you see CRISIL rating, all are above 3 rated, and assets under management is also quite high for other for all the companies except for Edelweiss. If you see return in short term, definitely the market condition currently is really bad. So if you see for last 6 months, the returns are low. But if you see from 1 year, 2 year, 3 year, 5 years, all the funds are giving a almost around 30% of more than 30% returns.
Okay, but one thing you might notice that when you talk about the Sharpe ratio or the trainer ratio, but you will
Yes,
find there is a consistent results. So whenever you sort a mutual fund on the basis of Sharpe ratio, you will find that the Sharpe ratio will be highest. Also, the trainer ratio of that fund will be highest among the category.
yes, sir.
Okay. So, of course, because both are capturing return and risk, so basically,
Yes.
they almost give an identical returns. Okay, fine.
Okay, sir.
So, you can even ask this question, that when you take a data set and you just find out, the highest Sharpe ratio and trainer ratio, they are giving the same results. So, is there any, where they can have a different results? So, maybe you have to just phrase it differently and ask this
Sure.
question to AI. That where
Sure.
there will be difference, where a particular fund will have a higher Sharpe ratio and a lower trainer ratio. And if you're relying on a trainer ratio, then you will choose the fund which is having a higher trainer ratio. Okay? So there's never a mismatch between Sharpe ratio and trainer ratio. They're showing consistent results.
Yes, sir.
So you can just find out, where there's a
Sure.
possibility. Okay, fine. Go ahead.
Yes. So if you see the standard deviation also is around moderate. It's not very low or not very high.
So when do you
Beta,
say it is high, what is the threshold of standard deviation? 14.69, or should it be, above 20 when you say it's higher? So what's the threshold? I mean,
maybe around 20 to 25 would be high. I'm
of
just
course.
taking a guess.
That again, just confirm this guess again through AI also. Okay, fine.
Yes, sir.
So find out, when you're, finding out a Sharpe ratio of a particular stock or a mutual fund.
Yes,
So
sir.
what should be considered as a moderate standard deviation? Okay, fine.
Yes.
So a standard deviation would means the degree of volatility. Okay.
Yeah.
So when we say 14%, like a fixed deposit will have a zero standard deviation. That means there is no volatility because the returns will be same over the period. But a
Yes.
14% volatility is considered to be quite a large, according to me, because considering that they're all mid caps. Okay, mid caps
Yes.
volatility is
Midcap
always
would
higher.
normally have a higher
Uh,
volatility.
so, but if you take a large cap this thing, then the volatility should go down compared to
Yes.
this thing. So,
Yes.
okay, fine. So, good.
Yeah. And if you see beta is also quite high for these. It's almost nearing one for all the companies. That's for all the funds. And also, as we discussed, Sharpe ratio and Jensen's alpha basically
So,
tells us
beta less than one means that it is less riskier than the market. Okay.
less riskier than the market, but uh, it also moves along with the like almost near to the market volatility.
मतलब अगर it is very close to one, when we say it is, as good as the market, basically.
Yes, it's as good as the market risk.
Yeah.
Um, Also, Sharpe ratio, as you discussed, you can see it's around one, except for Miraya asset, it's 0.63, and for HDFC, it's more than one.
Achha, tell me one thing though, I don't know whether you are aware of that or if you
Yes,
might have read. The beta, uh, you know, uh, can be different if you look at different sites, okay,
yes,
for the same company.
yes.
And uh,
So I took the long term. No, 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 sir. Beta was given and
no,
I got
my
this
question
direct.
is that, beta is something which is, quite different. The way you calculate it. Okay,
Yes,
fine. The method you use
yes, sir.
can
We have learned those methods like
you have learned
weekly,
whether you're using, the daily return, whether you're using a
daily
weekly
data, weekly
return,
data, monthly data over
whether you're
the.
using, a Sensex or Nifty or a larger index. So you will get
Yes,
different betas for all the
yes,
companies. Okay, fine.
yes, sir.
So as such, beta is not a very real. Now, only thing is that if you're using the same beta and then you're comparing, then it's okay. I mean, you can't have betas from different sources and then, say that some
Yes,
companies
sir.
less risky, some companies more.
Since all the beta is collected from same source, it's easier
If you
to use.
use beta from a same source, then it's okay. But of
Yes,
course, there is always a alternate to this beta used through regression. Now, this beta is using regression approach. Okay, that means you are
yes,
regressing the return of the market with a stock, isn't it?
yes,
Fine. So we take see the formula behind calculation the beta. It is nothing but regressing the market return versus the stock return. Okay.
yes.
Fine. So there is yet another mechanism which is called bottoms up approach. Okay. वो कभी
Yes.
सुना है आपने bottoms up approach?
No, sir. I
तो
don't
वो
know.
भी आप लिख लो सबके सब उसको जरूर एक बार पढ़ लेना. It will help you out. When you are doing your, I mean, work basically in your.
Sure, sir.
So it's a good this thing. It's developed by, I think, maybe more by Damodaran. Okay, he has written a lot of I mean shown a lot of calculations where he has calculated the beta on the basis of fundamentals rather than on the basis of market returns. Okay,
Yes, sir.
fine. What type of company it is and what kind of leverage it has. On that basis, they have calculated betas of all the companies in the world.
Yes.
So that is much a reliable source. ठीक है चलो go
Yes.
ahead. Go ahead.
So Jensen's alpha basically tells us the uh, excess return over the systematic risk calculated return calculated by CAPM basically.
Yeah, yeah. In the, for example, what kind of would be the actual return? What should be the ideal return? Either,
Yes,
this thing, expected return using the formula, okay, the CAPM formula, and what, I mean, return you have got. Okay. Or you can, in simply say, you can always say, compared to the benchmark, how much return the fund has given, higher or
yes,
lower. Okay.
yes. So if you see Mirai asset, it has given a negative return compared to others, but rest of them have a positive return and yes, sir. And trainers ratio also we have discussed.
Okay.
Yes, sir. And if you see the return for each fund compared to if Nifty 50 benchmark, they have a significantly high
Mhm.
return for all these all the funds.
Okay.
Then small cap also have chosen 5 funds and small cap. If you see expense ratios
Okay.
is lesser compared to mid cap funds, but Franklin India small companies fund has a high almost 1%
Okay.
expense ratio, and CRISIL rating also have not gone below 3 here. Asset under management you can compare. Uh,
So when you
Frank-
say that the CRISIL rating you have not gone below 3,
yes, sir.
I mean, of course, were there any, funds which were having a less than 3 or this thing, but they were
Yes,
figuring
sir.
in.
There were few
So
around
you
two.
excluded them. Okay.
Yes, sir. Two on one also. There were three, two, and one also. There were very few, but there were funds which had two, three, and one rating. Here also, if you see over the years, the return are it's giving stable returns. 5 year returns. If you see, every company has more than 31%. Every fund has more than 31% return. And again, as standard deviation and runners ratio is high for uh, all these funds. Being it small cap, it has higher standard deviation Beta is also high for these. Like beta is also less than one, of course,
Okay.
compared to the market, and even Sharpe ratio and Jensen's alpha. If you can see, these have given significantly high return compared to mid cap based on Jensen's alpha
Okay.
compared to the market. Again, if you see these graphs, if you can see compared to benchmark, they have given good return over the years.
So somewhere I'm getting 300%. What is that? 308, 100.
Yeah, this even I couldn't understand. It's I chose the all time this thing, so I think it shows all time return of Nifty 50 and all time return of the fund. But if you see the graph, you can see the difference here, sir.
Hmm.
The graph of the fund is this, and
So
graph
this
of
is
the
Nifty 50, okay?
yes, sir.
But again, when you're comparing a small cap fund return, so then the benchmark should not be Nifty 50, The benchmark should
Yeah,
be,
Nifty
can be
small.
five, I mean, the index, capturing the small cap fund, okay, index, rather than
Yes,
a
sir.
Nifty 50,
So
which
I
is a
thought
large.
I should use a standard for all the funds, so I'll
So
change
this
according
was
to
by default, it was coming like this, or you changed it?
it was default, but it was coming like this.
So maybe,
I think
yeah.
there is option to change it also.
Achha, so then you should always, make a change here because
Yes,
you can't compare a small cap fund return with a Nifty return, and Nifty return
yes,
cannot be 100.84. So maybe that you
definitely.
got some wrong number here, okay?
Yes, sir. Yes, I'll change those.
Yeah. Okay. Okay.
Again, similarly, multi-cap funds because they switch around fund from category to category. They have a higher expense ratio. It's more small cap and
Achha,
mid
tell me
cap are
one thing that there are two categories, multi cap and flexi cap.
yes, sir.
तो दोनों में difference क्या है?
Multi cap has fixed allocation for large cap, small cap, and mid cap. Flexi cap has it doesn't have fixed allocation. They can move around fund from one category to other category freely.
Okay, so I think there it is given like 25% for each category. That is,
Yes, sir.
the SEBI regulation, at least 25 should come out in each category. Okay.
Yes, sir.
And the balance can be from anywhere. Okay, fine. ठीक है,
Yes, sir.
चलो, ठीक है. So which is
So
which is better, a multi cap or a flexi cap, according to you?
uh,
And a
maybe
multi cap,
flexi cap.
yeah. Come on.
Maybe flexi cap because it's more active portfolio management there, and if large cap is not doing well, you are allowed to
A multi cap, you
move.
are basically fixed. That you can't. There is a kind of a thing that they should have a certain number of representation of the caps, basically. Okay.
Yes, sir. Yes, sir.
So that, and then multi cap or a I mean, flexi cap can contain other assets also, like it can have gold or maybe FNO, kind of
Yes, sir.
this thing, exposure to this thing. Okay.
Yes, sir. Similar. I have to change the format of the this thing. It's again showing 0 point
अच्छा
instead
ठीक
of
है वो कर देना.
yes. I'll change those.
Sure.
Here also you can see compared to large mid cap and
So only that it is not giving percentage, it is giving in points, isn't it?
yes, sir. Yes.
ठीक है, that's okay.
Yeah, it should have been. If you see the 3 years, it
Yeah.
should have been 16%, 20%, and 19%, 23%.
So on a 10-year basis, all these multi caps are giving close to about 13, 15, and 14. Okay, or
Yes, sir.
14,
So
15, and 14, like this,
yes,
between
sir.
14 to 15% over the 10 years.
Over 10 years.
So
Yes.
that means if you are investing in the whole, equity space, whether it's large, mid, and small cap, you expect about, close to about 15 percent kind of a return, or 14.5 to 15% return over a pretty
Yes.
long period of time. So that's a mean return of India, basically.
Yes, sir. So it's also compared to small cap and mid cap, it's less riskier also.
It is less because it is, combining all of them. And then the only message is that if you are making your portfolio for your life, it consists of all the caps. So basically, you are bound to get a close to about 15% return as per the current scenario, basically, which is talking about the 10-year broad area, I mean, years. So it gives you around 15% return, on your portfolio, right?
Yes.
So suppose if you have a 1 crore rupees portfolio at the end that time when you retire, you get 15 lakh rupees per annum as a kind of a return. So it gives you that kind of a. अगर आपके पास
Yes.
1 करोड़ का portfolio है, I'm just giving you this thing. If you have a 1 crore portfolio when you retire, so it will give you around 1,25,000 rupees kind of a pension per month. Okay.
Yes, sir.
Right.
Yes, sir.
So it depends how much you want. So then you will try to achieve that basically 1 crore, 2 crore, 3 crore, whatever.
Yes, sir.
Okay.
So again, for each fund, I've put the graph. I'll change the benchmark for each, and I'll remake this.
So here again the point was basically that it gives you 15% return over a pretty long time. Okay.
Yes.
But normally a person always when he makes a portfolio, particularly when he's making a financial portfolio, then he combines both debt as well as equity put together. So his
Yeah.
overall portfolio returns come to about 11 to 12%. Like my portfolio return comes to about close to about 11.5%. Okay. Fine, because I have a debt as well as a equity combination then. Okay.
Yes, sir.
ठीक है चलो.
So I think there's a mistake in the presentation, sir. So diversified allocation, if you see 50% is multi-cap, I'm giving 50% to multi-cap because it's less riskier and it's a stable portfolio, stability to the portfolio. 30% to mid-cap and 20% to small cap. So these are higher risk but have a higher growth potential
इसमें
as
गलती
well.
क्या है?
So इसमें फर्स्ट वाला कुछ ये निकल गया है सर.
अच्छा अच्छा उसे वो typo error है. Okay.
Typo error, yes.
Okay. So you're saying that 50% you should be putting your money in a multi-cap. You recommend in 30% in mid-caps and 20% in small caps.
Yes, sir, because of the risk. So
Okay.
least risk is multi-cap and 30% and 20% based on the risk of our these funds.
Okay.
So fund selection based on consistent history or performance, strong risk-adjusted return, sharp and trainers ratio, and experienced fund management.
ठीक है. Good.
Accessibility, yes, sir.
So this was your last slide?
Yes, sir.
Okay. Now, what was the learning for you when you did this exercise? What really you gained personally as well as for your future, this thing?
Personally, is whatever funds I invest right now is suggested my father or his fund manager.
Yeah.
So now I learned what to do.
Yeah.
Like if I want to make my own portfolio, when I start earning, if I want to invest on my own, what are the main things I have to consider? I learned that basically personally. That's a major learning to how can I create my own portfolio and what return I can expect.
Okay, so that is good that again there is only one writer here. This all have historical numbers. So basis on historical facts, you're trying to find out which is was the best, you know. But now when you talk to a fund manager or somebody, then it's always even to explore which funds will do better in the coming years. Like for example, now if you asked about 3 months, 4 months back with a fund manager or suppose from the financial analyst, he would say that park your money in large caps. Okay, fine. So you should have, your own, learning out of this whole exercise. But whenever you are putting money, look at the scenario. Okay, like what does it? Say. Because if the market has become overvalued, then the after the correction, people believe that the large caps would do better in future rather than the mid cap and small cap. So you have now learning from your data as well as what you are experiencing in your actual this thing. So you can just combine them and make your portfolio. Okay. Mayor, are you there?
Yes, sir. Yes, sir. Can I start the
Yeah,
third
sure. Yeah,
presentation?
third one. So this is the debt mutual fund.
Yes, sir. Debt mutual fund. So objective was to evaluate and select best performing debt mutual fund across three chosen categories. It focused on analyzing factors like return, credit quality, interest rate sensitivity, and fund management expertise. The aim is to match suitable funds with different investment horizon, risk appetite. This analysis will support informed decision making for fixed income investments. So methodology was fund selection, selected five medium to long duration fund, five dynamic bond funds, and corporate bond mutual funds based on the strong yield to maturity, stable modified duration, superior credit quality, low expense ratio, data sources of money control, and value research. Key metrics I'll discuss again. Economic outlook. GDP growth is around 7.6%, indicating strong economic health and support corporate bond funds through better credit quality and lower default risk. Inflation, if you can see, the CPI is around average 5.1% in March 24. This gradual decline opens door to rate sensitive funds like medium to long duration dynamic bond funds and to perform better. Interest rate, RBI cuts in April. RBI cut the repo rate to 6%, so boosting potential for capital gain for long duration and dynamic bond funds as yield as yield falls. Bond yields with 10 years government security yield or 7.1%, there is room for price appreciation, especially benefiting medium and long duration debt funds. Overall market impact, a falling rate and stable growth improves the risk return outlook for duration heavy funds, while corporate bond funds remain attractive for steady income with low volatility.
So, okay, just go back to your last slide.
Yes, sir.
So you have captured, everything, the economic outlook, basically with a view to capture, how these debt funds are going to be affected because of the economic
Yes.
scenario. So you have covered each and everything. So I think you have also, got the everything right in understanding the debt funds, how they behave and what are the main, kind of economic indicators to look at, basically to
Yes.
know, which funds are going to do well. Are you fully aware of that? No?
Yes, sir. Better than before, definitely.
Okay, good.
So we normally, what I invest or my parents invest is normally in only in equity mutual funds until now. I didn't have much exposure to debt funds. This allowed me to learn more about that.
You see, what happens is that, of course, your parents or the people who are above 50, they always have a balanced portfolio. They would like to put some money in debt as well as some money in equity. So they will always have, like a ratio of about 60-40 kind of this
Yes.
thing, either 16 equity or 14 debt, or maybe the opposite of it. But the younger generation, they're putting everything in equity, basically. When I asked my niece, she was, she had put all the money in equity and nothing in debt. But you should have some money as your age grows. You should be putting some money in a safety bucket because when you're earning, you're working in a company or you're doing own business, you're earning. So you're not bothered about, because your expenses are taken care out of your earnings. But when you have grown and become a little bit more of an age, you would like to put some money in debt so that, in case you can be supported for the debt funds also because they're not so volatile. Okay, fine.
Yes. So overview of debt mutual funds. Debt mutual funds are invested options focus on fixed income securities like bonds, with primary goal are regular income and capital preservation with lower risk than equity. Return are influenced by interest rate, issuer credit quality, and maturity period. Suitable for conservative investors seeking stable return. They cater to short, medium, and long-term investment horizon based on risk appetite. So in India, so basically, secondary bonds market is not that prevalent. Main, if people want to invest in debt funds, the only option is mutual funds in India.
Mm.
So
Yeah, because directly investing in bonds is not a good idea in India because you don't know what to do. So better is that you put your money in debt mutual funds. Uh, and tell me there is about duration or Macaulay duration. Were you aware of those two terms earlier?
no, sir, not before.
Okay, fine. Just go ahead.
So if you see there are different type of mutual fund, overnight fund, liquid fund, ultra short duration fund, low duration fund, money market fund, short duration fund, medium duration funds. So based on all these, I have selected three. Those are medium to long duration fund, dynamic bond funds, and corporate bond funds. These funds invest in debt, medium to long duration funds. They invest in debt securities with maturity profile between 4 to 7 years. They aim to benefit from falling interest rate while managing moderate interest rate risk, suitable for investors with medium-term horizon seeking higher returns and for short-term debt
Okay,
funds.
just hold on. You said medium to long-term funds because you were, have a view that the interest rates are going to fall and the funds are going to generate a better returns, isn't
Yes,
it?
sir.
Now, there was a bank which failed in America. I was just referring to that Silver Valley Bank or whatever was that bank.
Yes, Silicon Valley Bank.
Silicon, this thing. So what happened that, so they had invested, like 100% of their money into bond funds, okay, into a long duration funds in America.
Yes, sir.
And they thought they were very, they were having no risk, and their intention was to, hold those funds till maturity. Okay. Then, of course, even if there is a, falling interest rate, even the bond values goes up. I mean, they book or book, not on book profit doesn't matter because they want to hold the funds till maturity. So they'll get the return which will be equal to the coupon rate. But what happened was that the Fed has cut the interest rates from about zero to to the interest rate went up from almost zero to about 4.5%. Okay, not cut, rather Fed has not actually raised the interest rates. Okay, in America.
Yes, sir.
So what happened was that their investments became 50% of their value.
Yes, sir.
So if they are having, say, 100 billion US dollars into the government funds, it became almost like $50 billion. So they lost $50 billion because the interest scenario played just the opposite what they thought. What they thought was they're thinking to hold the funds till maturity. So that should not affect their profitability, isn't it? Fine, because they will be getting full money from the bank, from the government when the maturity comes. But what happened
Yes.
was that there was an adverse report in by McKinsey and other kind of analysts. So all the depositors of this bank, they went to the bank for ask the money. The bank didn't have money. All the money was parked in these bond funds. Okay, so they had to sell and suffer a 50% loss almost on the bond funds. Okay, and the
Yes.
bank became almost collapsed because of that.
Understood.
Okay, it is just because they had misread the market, and
Yes.
then even the accounting standards have been changed. Earlier the banks don't have to record a loss, mark to market losses, if the bank is holding the asset. They have intention to hold the asset till maturity, so they don't have to recognize mark to market losses. So that was the accounting standard had stated, the IFRS.
Yes.
So then the IFRS has been changed now in view of what has happened with this bank. Fine. So I'll just share a PPT for that. Okay, so you can.
Sure. So, and bond funds. Dynamic bond funds actively manage the portfolio duration based on the interest rate outlook. They provide flexibility to shift between short-term and long-term securities depending on the market conditions. Ideal for investors seeking return across varying interest rate cycles without committing to a fixed duration. And corporate bond funds. Corporate bond funds primarily invest in high-rated AAA corporate debt instruments. They offer stable and predictable return with lower credit and default risk. These funds are suited for conservative investors aiming for steady income over a medium and long term period. So key performance metrics are yield to maturity, average maturity, credit quality, CAGR return, standard deviation, expense ratio, and the fund size. So corporate bond, let's start with corporate bonds. The five chosen schemes are based on their mainly on the CRISIL rating and returns over the year.
Okay.
Here also I have not gone under 3 CRISIL rating, not under 4 CRISIL rating. And if you see expense ratio, it's quite low for all these uh,
Bond.
all the bond funds. And if you see yield to maturity is almost around 7% to all the funds. And if you see over the years, they have given stable returns.
So now again, just to check again whether you understood the concept. What does
Yes.
YTM stands for? Suppose this fund is giving about a 9% return, like Canara Rabeco, or maybe 10% for all others like Bandhan, whereas the YTM is below almost below 10, maybe 7%. So first of all, why there is a gap between the two, and what does the YTM signifies to you?
YTM is when the maturity when it matures, what will be the amount we'll get back? What is the percentage return we earn?
Okay.
And these return are, I think, NAV returns.
Yeah.
These monthly, if you see yearly returns, these are NAV returns.
Okay. So NAV returns are based on what? Akriti? Do you know that we did this in the class? Maybe Mayor was not there. Akriti or Ritesh?
Yes, sir.
Yeah, Akriti, tell me that the returns, here, particularly 1 year returns are close to about 10%. So what does a debt mutual fund 1 year return or any kind of a return will mean what? There are three things to it, basically. These three things are calculated on three kind of, formula basis. What are those three?
So formulas.
Formula means ki what are the basis of calculating an NAV of a debt fund? I'm saying. Like it says 9%. Whereas, the coupon rate would be around 7%. So how you're getting a 9% return when the coupon rate is just 7%? I'm just giving you a clue. Okay, Akriti? How a fund is giving 9%, 10% when the coupon rate is just 7%?
So I'll think about it, sir, and
हाँ
I'll
अभी
let you
अभी
know.
अभी तो
I think
थिंक क्या वो तो अपने प्रेजेंटेशन में
maybe
तो आपने बड़ा अच्छे तरह से
like
बताया हाँ
so changing market prices,
चेंज इन द
change market price of securities.
हाँ वो तो
That
है लेकिन वो हुआ क्यों है
Interest rate.
It is an interest rate, na. Akriti, you had given such a beautiful presentation the other day. It is an interest rate basically which is causing a shift in a yearly return. Because in the last couple of months we have seen the repo rates have been cut twice. Okay, so that
Yes, sir.
impact which is it is having on the NAV is coming out of basically the accrual aspect of the coupon. That is, suppose it is giving you a 7% return, so 7 divided by 365, so you get a per day return.
Oh,
Okay,
so
plus
you were asking this. Okay, sir.
so I think you didn't get my question, right?
Yes,
So the
sir.
second one is basically the mark to market impact on the interest rates, which is happening on the NAV.
So these three things which we read
Yeah, yeah.
in your
And which is the
PPT.
third thing? Third thing is, any haircut or a kind of a, what do you say that, there is a kind of a default. Okay. Fine. Haircut means that there is a downgrade in the credit rating of a company
Yes,
to
sir.
which the fund has given the money to. Okay, so fund has invested in, say for example, Idea Cellular, and Idea Cellular rating has come down from say a single A to triple B. So they have to take up a 10 to 15% haircut on their NAV. Remember that.
Yes, sir. Yes, sir.
ये बहुत जरूरी है. So do remember this, that there are three factors which leads to the calculation of NAV. Number one, what is that? The
So
coupon.
interest rate,
Interest rate. Second, of course, the
market,
coupon rate. You
market,
can say coupon rate to just to make it simple that it is just the rate. Yeah. Second,
market to market sentiments,
mark to market sentiment, mark to market,
Mark to market.
mark to market
mark to
impact.
market,
Okay. Third,
and then haircut.
the haircut and a downgrade basically. Either
Yes,
the
sir.
haircut, I mean downgrade in the credit rating, or the default committed by a kind of an investor. Basically, the person who has invested in these funds, like the fund has given money to someone. Okay, and they are what I mean. They are the borrower, isn't it? So the borrower is not paying money. Okay, so he has defaulted in making one of the installments. So the mutual fund is going to immediately make a provision for that. Okay, and reduce the NAV.
Yes, sir.
So three impacts. अब दोबारा बताओ Ritesh, are you there? Meher, can you just because you are presenting. So what are the three things which impact the interest rates?
Coupon rate.
Yeah.
Uh, I didn't understand the downgrading part. What you said.
Second one. Chalo, second one.
Interest rate.
One is the coupon that is captured by the YTM basically, or the coupon rate is the interest rate which which is there. I mean, because when you invest in a bond, there will be coupon rate. That is the interest what you are going to earn.
Yes.
And
Yes.
the second one is mark to market settlement, mark to market
Mark-to-market.
impact on the
Yes.
on the
Yes.
on the interest rates. Okay.
Okay.
If the interest rates goes down, the NAV of the fund will go up, isn't it?
One will go up. Yes.
So number two. Number three is if for example that like Canara Rabaco has invested what AUM is what 118 crores. Okay. Suppose entire this 118 crores is, given to a company, okay, say company X, who has, who has invested this money, okay. The Canara Robeco has invested 118 crores in that company itself, okay, and they are giving you about close to about 7% coupon rate, okay, fine. Now, if that company becomes, this thing, what do you say, bankrupt, okay, what will happen?
Yes.
The NAV will become zero.
Yes.
So the impact of either any downgrade in the credit rating of a company, or if the company is unable to return the money to the fund house, so the fund house has to make an adjustment in the NAV of their scheme. Is it okay?
Okay.
Now, have you got it?
Yes, sir. Understood.
Sir, one question, like you were talking about the mark to market. So discount rate is mark to market or the interest rate part?
हाँ, जो डिस्काउंट रेट होता है वही तो करंट इंटरेस्ट रेट है ना, जिससे हम डिस्काउंट करते हैं एंड कैलकुलेट द मार्केट वैल्यू ऑफ अ इन्वेस्टमेंट. दैट डिस्काउंट रेट इज नथिंग बट द करंट मार्केट इंटरेस्ट रेट, इजंट इट? फाइन.
Yes, sir.
जो
So
डिस्काउंट रेट
it
होता है
would
दैट
be
इज द
second
करंट
point.
मार्केट रेट इटसेल्फ, ओके.
So, sir, it would be second points part.
हाँ, नहीं मुझे समझ नहीं आया अब्दुल.
Sir, I am asking like the discount rate or the current interest rate. It would be part of second point.
Yeah, the second point, absolutely. The first point is
Okay.
basically the interest rate. For example, suppose if I have invested 100 rupees, okay, and I'm getting
Okay.
12% as a coupon rate, that means every month I'm getting 1%, isn't it? Fine. For
Right, sir.
calculating the NAV after every month, the 1% will be higher than the starting period. So NAV will go by 1% every month. Okay. Similarly, it can be going by a certain percentage every day. Okay, because NAV is calculated every day. So that is the interest rate divided by 365 will be, used for calculating the daily NAV of a mutual fund, debt mutual fund. Is that okay?
Okay, sir.
So जो इंटरेस्ट रेट है जिससे कैलकुलेट, जो इंटरेस्ट रेट हर दिन का आपका पैसा बढ़ता जाएगा ना. सपोज यू हैव गिवन अ मनी टू अ बैंक एज अ फिक्स्ड डिपॉजिट, so every day your money is growing there, okay, because of the interest what the bank is paying to you, isn't it? So that is the first kind of a
Yes.
return which the mutual fund gets by, investing the money in a company, okay, fine.
Okay, sir.
Or second है mark to market. That means because if the interest rate goes down, the value of the fund will go up, isn't it? So that will be captured by the NAV. And the last
Yes,
one
sir.
is basically, because of, some kind of either a downgrade or a kind of a default committed by a company. Okay. Is it clear? Abdul,
Yes,
is
yes,
it?
Yes.
this is clear.
ठीक है, तो एक बार दोबारा देख लेना. This is a very important thing, and that is something which is, there are two very important concepts. One is the duration concept in a debt fund, and the second is basically, how the NAV of these funds are calculated. Okay, fine. Okay, Meher, can you just
Yes, sir.
complete this? अब आपको मेयर समझ आ गया ना, जो कहते हैं मुझे समझ नहीं आ रहा थर्ड वाला.
Yes, sir. I got it.
Okay, fine. So वो PPT में दिया हुआ मैंने. If you just go to the debt funds, I have explained that. Okay.
Sure, sir. Sure.
Fine. In fact, I had just prepared an Excel sheet. I calculated the NAV of each fund on every day. Okay, so that I didn't share it. So even I'll share that Excel sheet
Okay.
also, so that you can just go through that.
Okay, sir.
Okay.
So, yes, sir. These are the data collected for all the funds. Standard deviation, as you see, it's very low. Beta is less than 1. Sharp ratio is negative. That indicates a less return than the risk-free rate.
Mhm.
Also, Jensen's alpha for 2 of the funds is negative. That indicates that the underperformance relative to the CAPM model, whatever expected return was calculated. And tolerance ratio is almost near to 0 or negative 0.01.
Okay.
And if you see the graph, so for this thing, this was giving the default
Yeah.
graph of CIL
ठीक है,
corporate
इसमें भी
debt.
error आ रहा, आपका benchmarking में error है. It
Yes, sir.
seems, but you can just compare with the fund return with the category returns. So
Yes, sir.
this fund is first one is giving a better one. Okay. And the
category
second one is
average.
giving a lower than the category average. Okay.
Yes, sir.
And the third one is also giving lower. Okay. Fine. Corporate bond funds. ठीक है चलो आगे चलो.
Dynamic bond fund. Here also I've chosen uh, five based on the CRISIL rating and returns over the year. There you can see stable returns. The CRISIL rating not less than 3 for all the this thing, and also expense ratio are low for almost everyone except for the first one, Baroda BNP Paribas. It has around 1.57%, and yeah, so modified duration basically with 1% change in interest rate, what will be the impact on the return?
Hmm.
Uh,
So the first one you have chosen is, so these are dynamic bond funds. So
yes,
the first two or three, they're having a very high modified duration, 12, 10, and 12. Okay.
yes, sir.
So are these risky funds compared to the bottom two, or the last two are less risky, or so what do you say about those funds? ये 10, 12 और 10 वाला ये ज़्यादा रिस्की है या 7.8, 7.9 ज़्यादा रिस्की है? If I ask you this question.
12-10 वाला ज्यादा risky है
Why?
because with 1% change in
So they are more interest rate, sensitive compared to the
sensitive.
bottom
Yes,
ones. Okay.
they are more interest rate sensitive.
So it can give you both ways, either higher
Positive
returns.
or a negative, yes.
Yeah, yeah.
And also return, if you see around for 7 to 8% over the years, 1 year returns are higher as we discussed before, and
Okay.
they have higher return compared to yield to maturity.
Okay. ठीक है. I got you.
Yes.
So just show me the last slide. यही है, यही आखिरी है, recommendation.
Last side, yes, sir.
So investment strategy.
So 40% for corporate bond funds because they're compared to all this, they have higher yield to maturity, offer stable return and low credit risk. 30% to medium and long duration fund, and 30% to dynamic bond funds.
Okay. 40% in corporate bond funds and 30% medium to long duration and 30%. Okay, fine. ठीक है.
Yes, sir.
So okay, now this was your last slide, isn't it?
Yes, sir.
अच्छा चलो, we are just going to end the lecture now, and just tell me one thing. I talked about that bank, this thing, Silicon Valley Bank.
Yes, sir.
तो वो जो मैंने बताया था, कुछ समझ में आया था क्या था वो?
Silicon Valley Bank basically उन्होंने they invested all their money in government bond securities, and suddenly the government cut the interest
No, not
rates.
cut the rate. I just used that wrong, but it actually they increased the
Increase the
rate. Okay,
rates.
the Fed started raising the rates.
Yes.
Earlier they were dropping the rates, and they make it almost to zero. After the 9/11 and everything, whatever happened there, or after that meltdown, financial meltdown, they started cutting the interest rates to boost up the economy. Okay, and then they started raising the interest rates.
They increase the interest rate to raise more funds for the government through government bonds.
Yeah, so they raised the interest rate because ultimately, they followed a policy which all the banks they follow based on the inflation rate. The repo rates are decided. Okay, so they followed that mechanism and increased the rate there. Okay, the bank rate to close to about 5%, from almost 0 to 4.5 to 5%. So what has the impact on that, on the Silicon Valley balance sheet?
So they basically their bond valuation fell down, and all the bonds were held until maturity. Though they couldn't sell the value of those bonds fell down, so they couldn't sell those bonds and get the money back, get the cash back.
Just put it right. What had happened was that since they had put, like most of their money investment was in form of government bonds, okay, or all kinds of bond funds. Mostly they were all, government bonds. So what had happened, because the Fed has started increasing the interest rates, and the bond value started coming down. Okay. So assuming that they had about $100 billion of money invested in government bonds, so it became to $50 billion, the market value of those bonds, because the interest rates were going up, the market value of the bonds were falling. Okay. So In the balance sheet, they were still showing it as $100 billion because their intention was not to sell the bonds. Okay, it was to sell only at the time of maturity, so they'll get $100 billion from the central bank there. Okay, the fund. I mean, the bonds were issued by the central bank, so they'll get 100% money from there. So they never made any
Yes.
provision in their balance sheet. Okay, though in fact they were suffering a loss of about $15 billion on any given day in that time. Okay, so now there was some adverse report which came in the newspapers, and all the depositors, particularly the Silicon Valley
This is a
bank,
bank run.
so they rushed to the bank to take out the money from there. The bank didn't have any money, so they had to forcibly sell all their government funds, okay, government bonds. So where they suffered a loss of about $50 billion because of that. That was the half of their money, which they had 50% of the money they got. So that led to a collapse of that bank. You got it?
Yes, sir.
Yeah. Have you got
Got
it
it.
now? Why they collapsed?
Yes, sir. Understood.
So now only thing was the only learning here was that they had in America or anywhere there are accounting standards, international accounting standards. All the banks need to follow. So the bank had not reported any loss, any mark-to-market loss on
So
these.
the mark-to-market loss was changed after 2008 mortgage crisis also, right? After that, they
No, it actually it never the accounting standards changed only after the Silicon or this Valley Bank. Okay, this was
okay.
Silicon Valley Bank. Okay, after this the accounting standards were changed because the bank said that we were having we our intention was to hold the bank these bonds till maturity. So that's why we had not made a provision in our balance sheet. So they followed the right accounting principles as given by the accounting standards. So of course they could not be I mean what the accounting standard was changed basically thereafter that even if you are suffering a loss and you have an intention to hold the bonds till maturity, you have to make a provision in your balance sheet so that the investors who have invested in your company, they should know what is your real position. Okay, fine. So they're hiding the position on the guise of the accounting standard basically. They are taking the shelter of the accounting standard because the accounting standard didn't permit them to make a provision of 50% loss on their investments, despite the investments have become almost 50% to the value which they have purchased. Okay. अभी ये समझ में आ गया आपको?
Yes, sir.
Akriti, have you followed this? What I was saying?
Yes, sir. Yes, sir. So I was listening.
So this, if you just go into the Google and find out, or even on Chat GPT, what was the main reason of this bank failure, so you'll get exactly what I have narrated to you. Okay.
Okay, sir.
So even the accounting standard got changed thereafter. Okay. Chalo, theek hai. So good. I mean, Mayor, your presentations were good. So have you submitted your presentation on the Google Drive?
I have uploaded two of them, but the last one.
हाँ वो भी कर देना. So I'll be giving I'll be now because we are approaching almost to the end basically. So I need to put all the grades, everything in place so that
Sure.
the time comes. So I mean
I'll just make those changes
हाँ
for
आराम
the
से कर दो.
benchmark.
2-3 दिन में कर दो, जब भी कर दो, कुछ हरी नहीं है. Okay.
Sir,
Yeah.
I was having one doubt with the end-term exam.
Yeah.
So, sir, the assignment which you gave, so I have taken Swiggy IPO.
हाँ.
So at the time of the IPO, so they were having a negative EPS.
Okay.
And because of that, their PE ratio is not applicable.
The PE ratio is not there because it's a loss-making company. So then have you gone through the prospectus? So how they have compared, how they have justified the price?
Sir, they have given the industry PE ratio,
Okay.
and they have written that their the competitor is that Zomato only. So Zomato's PE and everything is given.
Okay.
So sir, how should I deal with this in the presentation? Like, should I write not applicable for their PE ratio?
Definitely, you can write that, of course, because otherwise the only limitation is basically that we are using always the PE ratio, but there are a price to sales ratio also we can calculate. What you can do is that what I did was for the same like Swiggy, I think you're doing, isn't it?
Yes, sir.
So you can just go to ChatGPT and find out what was the price to sales ratio of these Indian companies as well as companies abroad. Okay. So based on that, you can always make a commitment from yourself, whether this company is still, rightly priced or not, price to sales or EBITDA to sales, whatever ratio which is available.
EV by EBITDA or price to book
Price to
ratio.
book ratio. I mean, of course, price to sales ratio will be still more ideal. Okay.
Hmm.
So if you pose this question to AI, so it will give you some kind of answers. Okay. Right.
Okay,
मैंने
sir.
बनाए हुए हैं सब. I don't remember exactly what I did. I think price to sales, and we all saw other companies outside India also at how they are trading. So the comparison was drawn from those companies, and then the value of the IPO price can be justified on that basis. Okay.
So, sir, for Swiggy, I have to compare it with Zomato only because in their RHP, only Zomato
हाँ,
is being
वो
given.
RHP में दिया है, but as you can always now that you can even compare with any international company also, isn't it?
Okay, sir.
So if you do that, it will be very good. If you take, because in India we have now Swiggy, Zomato, and I think और भी company है ना कोई Zepto and other thing.
Zepto, yes, sir.
Maybe we have one or two, and there is one or two international companies who are doing the same kind of this thing. I'm just forgetting the name. Its name starts with D. Okay. So so when you look at that company, I'll just share with you one file. So where I've done, if I get time, okay. Otherwise, you can just do it on a chat GPT. You'll find the comparative companies all across the world, okay. Or go to Trading View, so you'll get similar companies there.
हाँ, so there were many companies given in this
हाँ, तो थोड़ा
screen.
सा आप उसको ऐड कर सकते हो अपने प्रेजेंटेशन में, okay, if you
Okay,
want.
okay, sir.
Fine.
So the matrix which I have to use is P by S, right?
Yeah, right. हाँ, P by
Price
S.
to sales.
Yeah.
Okay, sir.
Okay then. Okay, see you then on
Okay, thank you,
next
sir.
class. Okay. And next class is going to be online, Akriti.
Yeah, okay, sir. I'll inform Monica, ma'am.
हाँ हाँ बता दे. ठीक है चलो.
Okay.
Okay.